welcome back to the Insurance Mantra show. In our segment Experts Speak today, I'm joined by Nilesh Sathe, veteran of insurance industry, former member, Life IRDA, former executive director at LIC. Thank you so much, Nilesh sir, for joining our inaugural episode of Insurance Mantra. So to begin, I just want to understand from you, because in this segment we will try to discuss very basic questions of insurance. And to begin with, I just want to ask you, how much insurance is enough? And are you, if somebody is underinsured, so according to you, how much insurance one should buy in a life insurance and health insurance?
First of all, Anurag, let me compliment ET now for starting this insurance awareness program. It will definitely benefit everybody. Coming to your question, how much one should have insurance? The answer is it is called economic replacement value of money producing machine. Slightly technical, but just think over. A human being or a head of the family is earning per month some amount of money. If he is there or not there, the family should continue to get that amount, maybe slightly less because one person is less in the family thereafter. So the economic replacement value of a money producing machine is roughly calculated as a thumb rule 100 times of the monthly income, because taking inflation into account, the interest rates into account, by and large the family will get about the same amount of monthly payout that the human being was, or the head of the family was giving. So if somebody is earning say 1 lakh rupees per month, 100 times of that will be 1 crore. So he needs to have 1 crore insurance. And this is as per the human life value, which is technically calculated. Let us not go into the complexities of how it is calculated, but the thumb rule is you should have insurance to the extent of 100 times of your monthly income.
Okay, so 100 times of your monthly income, you have said, but that includes only life insurance or health insurance or all sort of insurance?
Oh no, it is only life insurance. For
Okay.
health insurance, there is another ballpark, for health insurance, by and large, where you are staying is very important. Because if you are staying in a small mid-town or a small city, then you have to find out from your nearby hospitals what is the highest amount of payment for a specific surgery. Take, by and large, bypass surgery is supposed to be the costliest surgery, by and large. Now, if it is going to cost you 10 lakhs in that particular hospital where you want to get admitted in case required, then obviously you need to have at least 10 lakhs of health insurance. This is a thumb rule, or more, not just 10 lakhs, because medical inflation is galloping. Every year it is going up by 10 to 15%. So you should have at least 10-12% more than what the particular hospital is charging for bypass surgery. So first is life insurance, because there is a possibility that due to accident or something, you are alive but you have to get admitted to hospital. And in that case, health insurance is also a must. So the first important thing is life insurance. Then the next is health insurance. And then, of course, the third comes as investments. So you should be adequately insured. But then many times it is seen that even people who are day in, day out into insurance are not adequately insured. So what is important is look at what is the amount of insurance that is required and go in for that. Secondly, our income keeps on increasing, but the insurance premium is always constant. It doesn't increase with age once you have taken insurance. So what is important is take a review at the end of 5 years, 10 years. The income must have gone up. So your value also must have gone up. So as I said, it's a human life value. So if value has gone up from 1 crore to 2 crore, it is necessary that you should take additional insurance of 1 crore. So you should always keep on evaluating and reviewing the amount of insurance that you have so that at any point of time in case of emergency, the family is adequately financially independent. That is the purpose basically of insurance. Secondly, we always call it as a tax to family. Many times, Anurag, people think that I am taking a term insurance policy, I am paying premium, and at the end of the term, when I grow 60 years of age, nothing is going to be paid back to me.
Yeah.
We always say that consider it as a tax to family.
And do you think, sir, that it's better, always better to go for a pure protection term plan, because a few companies also offer that premium will be returned on the maturity. So what would be your advice to go for a pure protection term plan only, or sort of a policy where you get the return back of your premium?
Yeah, yeah. Anurag, actually, marketing is something which must be learned from insurance salesmen. When he comes across a lot of people who say, what I'm going to get back on maturity. I don't want any such policy where I'm not going to get back anything. So insurance companies have come out with plan where you get back your premium on maturity, or you pay only for 5 years or 10 years, don't have to pay throughout life, and whatever you have paid, you will get back maybe double of that on maturity. But then try to understand one thing. There are no free lunches. If at all insurance company is going to pay you back something, from where it is going to pay you back? It is going to pay you back from the amount that they have collected. So it will keep on collecting slightly more than the pure term insurance premium from you. If at all there is a condition in the policy that the amount of premium collected will be returned on maturity. So the pure term premium is always the lowest. But if you want premium to be paid only for 5 years, then premium will be higher, of course. If you want it to be paid only for 10 years and thereafter not to be paid, it will be slightly less, but still it will be more. If you want the entire premiums to be refunded, obviously the premium will be higher. So the best way is take a pure term policy. Don't think that I'm not going to get back anything in return on maturity. Doesn't matter.
So my next question is related to the health insurance, because health insurance is often avoided due to the rising premium, with many saying it's not affordable. So how valid is this concern according to you, sir?
There are a couple of reasons why health insurance premiums are rising. The first and foremost is we have seen the claim experience is not favorable. Claim experience is not favorable again because of two reasons. One is many times it is seen that hospitals are inflating their bills. Not always, but it is seen. Second is there are a lot of non-disclosures. What is there if I say I am not a smoker? But no, that is going to impact your life. And in the process, the health premium is going to increase. The third point which is seen is there are no regulations for hospitals. Hospitals need to be regulated. What is happening, even a C class hospital, once it knows that you have got health insurance policy, it charges you exorbitantly for things which are otherwise charged at maybe 50% rates for other patients. And there is no control on that. So what is important is health premium is definitely going up, but it may not rise if these leakages are plugged.
And sir, if someone have to buy insurance policy and that person can afford only 5,000 rupees of premium, so what will be your advice, to go for a term plan or to go for a health insurance?
Initially, one must have adequate term insurance. Term insurance means sum assured. That is basic life insurance. And then the balance he should invest into some health plan. Health plan, government also has got some policies where you get free treatment That also one should try if he is below poverty line or is fitting into that criteria which is prescribed by the government. But if you are adequately insured for life, then the next is you should think of health insurance and start with a small amount. Doesn't matter, 10,000, 20,000, 1 lakh, doesn't matter. But start with something and then keep on increasing it. You can have family protection thereafter. You can have some add-ons. So my advice will be life insurance first, health insurance later.
Life insurance first, term insurance first, and then go for health insurance. So my final question to you is that is the choice of insurance company really matter? For instance, if two companies have the same claim settlement ratio, so one should go for a cheaper premium, or does the choice of insurance company really matter for policyholders?
I will not say it matters or not because all insurance companies are regulated by IRD. So there is a grievance redressal procedure, there are ombudsmen. So in case you do not get a claim or some deductions are there, uh, there is a IRDA has prescribed the grievance redressal mechanism. But again, the company with which you are comfortable with. Like suppose there are two insurance companies with similar claim record and everything, and one company is very near to my home or near my office, or many of my friends, relatives have taken insurance from that company. You should prefer that because if experience of others is good, there is a likelihood that your experience will also be good.
Certainly, certainly, sir. So it's a just your choice to choose insurance company, as insurance companies are keen on settling claims. Sir, we are running short of time, but thank you so much for joining us today. You have shared your insight from how much sum assured is necessary, 100 times of your monthly income. For before health insurance, go for term insurance, and health insurance also one should choose. So basics of insurance we have touched upon. Looking forward to join you again in episodes going ahead, because this is our weekly show, and we will try to bring more and more information for our viewers. So that's it for this week's episode of Insurance Mantra. Next week we will take the conversation forward and focus on how insurance reach can be expanded in rural and underserved market. Joining us will be Girja Subramaniam, CMD of New India Assurance, to share insights on bridging the protection gap. Until then, keep watching ET Now.